Good morning.
Good morning.
My name is Sam Farr. I'm a member of Congress from the Monterey Bay Area, and I was a former Peace Corps volunteer, returned Peace Corps volunteer in Latin America in the 60s, early 60s, one of the first groups to go to. I went to Colombia, South America, lived as a minority in another land, learned another language, and fell in love with all of Latin America, geography, people, and realized when I got in Congress that there wasn't a lot of focus on Latin America, and that we ought to try to upgrade that focus by inviting staff members and NGOs and anybody in Washington who's interested in just having a seminar. So we've been doing these seminars now for, I think this is the briefing, I guess we call it, the 24th. Katie Whelan in my office is the one who puts it all together. So if you have any interest in suggestion of topic matters, or you'd like to be a panel presenter, please get a hold of Katie. Today we have Michael Orozco and Mario Hernandez and Natisha Bajuk, and moderator you've heard many times here, Mark Sullivan, who's a specialist in Latin American affairs with Congressional Research Service. As I said, this is the 24th program on Latin America on the Rise. It's a monthly briefing service. And I've learned so much and had such little time to actually sit in most of the briefings, but Katie preparing for them always gives me a build up and then a post-mortem, and I've learned a lot. I hope you have too. Well, one of the issues that seems to me that's very intriguing is the one on remittances. I don't know whether it was the Inter-American Dialogue or someone had a dinner a couple of years ago talking about how what we could do about remittances. And basically, it's just shocking about the amount of money that is in remittances. And these are where families send part of their American earned paycheck back to their families in all over Latin America. Some countries more than others. But it's a huge amount when put in total. In fact, it's 8 times greater than all of the aid that our country, we put $6.2 billion of foreign aid into Latin America. Remittances from, and these are not, people of well means, these are your working low and moderate income folks, have sent back annually about $53 billion to Latin America. In El Salvador, Honduras, and Guatemala, these 3 countries, the remittances constitute 10% or more of their gross domestic product. And over 50% of the immigrants from Spanish-speaking countries send a portion of their U.S. earning back to their families. So we're talking about a lot of money, and it does have an impact, particularly upon the receiving family. But what is that impact? And one of the problems that the host countries have is it's not money that's taxed or put into the social benefit of the community. So lucky for the people that receive it, but not necessarily upgrading the quality of life in these communities, the communities that we work in as Peace Corps volunteers. So you have, it's reduced the poverty level at the household level, but has not reduced the poverty level nationwide. So I thought these experts could give you some background as they discuss the issue. And I'm going to turn it over to Mark Sullivan. As I said, Mark's a specialist in Latin American affairs. He works for Congressional Research Service, who works for us. And therefore we get incredibly smart people to come over and help us put on these seminars. And I want to thank all of you for coming. And I hope someday maybe we just have a social gathering so we can all meet each other better, because I really do think, of all the CODELs I've gone congressional delegations, Latin America is the fewest of any spot on the nation in the world. We just don't seem to pay much attention to it. And I think, and one of the things that I was asked because of my interest in Latin America to go with President Obama to the last summit. In fact, I went to the summit before that with him, and I've had experience at both summits. But what I was shocked at in attending the summit, one, the agenda looked like it was written by a Peace Corps volunteer. And it was for all of Latin America. And the agenda was one where the presidents had already agreed to recognize that there was poverty in these countries. and that the real economic development had to be to work people out of poverty, and how do you do that? And one of the suggestions, which I think is really keen, because I think it really unifies people across political boundary lines, is the energy issue. Every country has some way of producing electrons, whether it's oil or gas or geothermal or hydro or whatever. And we've got a lot of expertise on how to do that in micro ways. And that if we could really get an energy grid that would be, transmitting electrons all over the Western Hemisphere, and can get a political buy-in from both the left and the right, that the Western Hemisphere would be the cheapest energy region in the world, and therefore we could take the savings that we're spending on energy and invest in social programs and infrastructure development. So we've actually had seminars on that as well. Mark, I think you conducted that. But thank you for coming today. This is a key issue, just understanding the magnitude of remittances and what might be a way of getting a better bang for the buck. So I'll turn it over to you.
Great. Thank you, Mr. Farr. It's always great to be here. And I love to have these monthly events because it shows that there is interest in Latin America. Oftentimes we have an overflow audience in the room. But thank you, Mr. Farr, for your sustained interest in the region. We have a great program lined up today. We have 3 outstanding speakers looking at the topic of remittances to Latin America. Just to provide a little bit of background, and I know Mr. Farr did as well, let me just throw out some statistics. A recent Pew Research Center study showed that about 78% of total remittances flowing to Latin America in 2012 came from the United States. And this amounted to about 41 billion of the total 53 billion in remittances flowing to the region. And of that, remittances to Mexico alone account for more than half of U.S. remittances going to the region, some 23 billion. Now looking in terms of their effect on the macro economy, while remittances to Mexico contribute about 2% to Mexico's gross domestic product, there are several countries in the region in Central America where it's a lot higher, the impact. For El Salvador, Honduras, Guatemala, and Nicaragua. And remittances to those countries contribute a much larger share, ranging from as high as 17% in El Salvador to just under 10% in Nicaragua. The Pew study also showed that remittances to Mexico were significantly below their peak in 2006, but for a lot of other countries, many other countries in the region, remittances have recovered from their slump that was associated with the U.S. economic recession. And so they now actually exceed their previous peaks. In terms of the uses of remittances, I know Mr. Farr alluded to this, while it varies from country to country, a significant share of remittances is spent on basic needs such as food and clothing, while a smaller share is spent on savings and investment. And then just finally, the average cost of remittances to the region has gone down, has declined in recent years, and that's because of improved technology such as mobile banking and online money transfers. It has made it easier to send money back home. So to explore these issues in more depth, we're fortunate to have 3 speakers with us here today who are really leading experts on remittances. They come from the perspectives of academia, from the perspective of the multilateral development bank, and a perspective from the private sector. I'm going to introduce all 3 speakers and then I'll hand it over to them. First speaker is going to be Dr. Manuel Orozco. He's a senior fellow with the Inter-American Dialogue here in Washington. He's actually on leave from the dialogue for a year to work with the International Fund for Agricultural Development. But at the dialogue for some 15 years, he's been there, and he's directed the program on remittances and development. He's conducted extensive research, policy, analysis, and advocacy on the issues related to the global flow of remittances. Actually, when Dr. Orozco is the first person that comes to mind when I think of experts in terms of remittances to Latin America. Most recently, he authored a study commissioned by the IDB's Multilateral Investment Fund on the economic status and remittance behavior among Latin American and Caribbean migrants in the aftermath of the recession in the United States. Just as one last point, I'd highly recommend you all taking a look at the website of the Inter-American Dialogue. They have a page on remittances in development, which has links to dozens of studies, including the one that I just mentioned. Our second speaker is Natasha Bayuk, who works on remittances and other financial issues. She's actually at the IDB's Multilateral Investment Fund, the MIF. She coordinates the MIF's agenda, known as the Bank the Unbanked through Payments and Transfers. That's a mouthful. But that focuses on remittances, domestic transfers, and government payments. Ms. Bayuk represents the MIF on international task forces on remittances, and she's a frequent speaker at conferences on access to finance. Our third speaker is Mario Hernandez, and he hails from the private sector. He's a director of public affairs over at Western Union. Of course, Western Union is one of the leaders in global payment services. It has over 500,000 agents around the world in more than 200 countries and territories. He's responsible for the development and implementation of public affairs strategies to reach the company's various constituencies, including Latin American communities, both in the United States and in Latin America. He's played a key role in designing and implementing Western Union's corporate social responsibility programs. It includes a Mexico program involving Western Union's partnership with the public sector and immigrant-led hometown associations with the goal of boosting investment and job opportunities in several Mexican states. So without further ado, let me turn it over to our speakers, and we'll begin with Dr. Orozco.
Thank you, Mark, and thank you to Congressman Farr and the office for organizing these meetings on Latin America, which I really, not only important, but I think that we need to enhance the discussion on Latin America for many reasons. And one of them is that it's a region that actually is changing more rapidly than what we realize, and is going to have a significant impact in development, but also to the global economy. The numbers that Mark mentioned, basically, they capture facts and realities that that are reflective of three important realities of the life of the Latin American society. The first one is that Latin America basically, and especially since the 1980s, and particularly since the 1990s, has increasingly been globalized through migration, has been integrated into the global economy through a significant flow of migrants that basically has had two main waves. One, early on, that starts in the 1980s, more or less, and continues until the end of the 1990s, early 2000, and mostly unskilled, undocumented migration that comes to work to supply a particular demand on the service economy, construction, and the hospitality industry. There is a second wave of migration that has also increased substantially, that is significantly different and is connected to higher skilled labor, more legalized, and connected to the changing dynamics also of the U.S. global economy, particularly integrated into the knowledge economy, into management, and also increasingly skilled in agricultural work in the United States. We're talking about 40 million migrants, more or less, from Latin America coming to different parts of the world, but 75% of them are here in the United States. Second is another important reality is that the families and households of migrants who are in Latin America, we're talking about 40 million households. Now, the significance of that reality goes in different directions. These societies have really transformed themselves into more transnationalized livelihoods, whereby the influence that they receive from their families living abroad has changed some of their cultural standards, some of their social practices, and the economic livelihoods. One of the important aspects of these households is that in some parts, particularly in the Caribbean, for example, at least 40 to 50% of households in the Caribbean have a relative living abroad. Even in a country like Mexico, with a population of 110 million, we're talking about 27 million households, whereby at least 5 million of them have a relative living abroad. So the significance of migration into the household economies in Latin America is substantive. And on the one hand, you have a migrant labor force that establishes a number of economic activities back home, including sending money home. On the other hand, we have a society that is connected to the global economy through migrants and has transformed their livelihood in different ways. And the third reality is a byproduct of these other two, which is that there is an intersection, a deeper intersection between migration and development at various levels. Remittances is only one of them. We have migrant capital investment, diaspora philanthropy, imports of nostalgic goods from the United States to Latin America, from the United States, from Latin America to the United States. People buying tortillas, Coca-Cola bottles in Mexico, and many other commodities of that sort. We just finished a study on nostalgic trade that shows that 89% of immigrants consume home country products and spend about $125 per capita in those type of foodstuff. There is a fundamentally important value chain connected to nostalgic trade. And when we look at remittances, it is true that they do have a significant effect on the household's economy. The impact of remittances is the following. It increases disposable income at the household. It's not that you separate one income and another one, but it all fungible into a pool of income. That increases of disposable income have an effect in better expenditure in food, clothing, nutrition, but also has an effect on savings accumulation. Remittance recipient households increase their ability to save, not only in the number of people who save, but also in the amount saved. The stock of savings of remittance recipient households amounts to at least half a year of annual income in that household. And the effects are significant. You increase the demand of local commodities, consumption of local commodities, but also you increase your stock of savings, and a small percentage of people invest in real estate, for example, and small businesses. Now, there is a policy challenge to all of this, and the policy challenge is that the local economies are still unable to absorb these foreign savings at different levels. For example, the majority of people who save informally. Second, the investment that they make occur mostly also in an informal economy. And the main factors explaining that is because there are barriers to entry among the people that receive remittances. Barriers to entry to get financial access, to be included into the financial system, to mobilize their savings into the economy. There are also barriers to entry to buy a house, for example. The difficulties for immigrants as well as for remittance recipient households to invest in real estate are quite substantial, starting with the fact that in most of Latin America, to get a loan to buy a house, the loan amount typically starts somewhere around $70,000 or up dollars. So most people want to invest $50,000, borrow $50,000 to improve their house or to buy a new house, and the access to that loan is nearly difficult. And if you're able to access it, the cost of paying for that loan, basically it's about 80% of your income. So it's really an impossibility, and that causes informality in that investment. So there are difficulties in mobilizing your savings into the financial system that constrains your ability to have a credit history, to have opportunities to borrow, and then when you want to invest, you are limited. And when small investment occurs, for example, in in businesses, most of the investments are also informal, and that poses another challenge of a different nature. So for the most part, what we see is that there are a number of challenges connected to international migration, and particularly to remittances. The macroeconomic significance of remittances is not negligible. If we looked at the drivers of economic growth in Latin America, you're going to find that there are 5 main drivers. 1 is agricultural exports, 2 is the energy and extracting industries, 3 is tourism and migration, 4 is the knowledge economy. And migration is basically one of the most important drivers, especially for Central American and Caribbean countries, and even some South American countries. Yet, in the majority of the region, there are missing policies that integrate these dynamics into the national economies. Part of it is because there is no clarity of what are the impacts that you could leverage from these dynamics. Another reason is because facts are weaker than opinions. Politicians oftentimes have very powerful opinions about what they see are the real problems in their economies, and they neglect to understand what are the realities shaping their societies, and there is a significant neglect on the dynamics of international migration for the Latin American societies. And the economic dimension of it is also neglected in that context. People only have a very narrow view of remittances as they are detached from the household that sends and receives, and they only looked at the numbers. And that narrow perspective really blinds your ability to think creatively about the range of policy opportunities that are out there. And in that context, you can identify a triangulation of policy strategies that you can promote. The first set of policies have to do with improving the condition of migrants. The economic vulnerability of immigrants in the United States, Europe, and other parts of the world, including in the Americas, 15% of migration from Latin America occurs within Latin America. It's relatively weak. Immigrants are in a vulnerable financial position for the most part. They have very little financial access. They have difficulties in improving, in accessing and building assets. And so strengthening their economic base is significant. Of course, in many cases, one of the challenges is their legal status. It's one of the major determinants of their financial vulnerability. You cannot neglect to look into that. But there are other challenges that have to do with other issues such as labor rights or full economic inclusion of these migrants into the financial system. So you can identify different policies. They increasing access to certain financial products, providing financial education, linking transnational financial products to migrants so that they can invest back home or mobilize at least their savings into an account in their home country. There are significant barriers to entry in that context. Immigrants in most countries cannot open a bank account. I was in Haiti just a couple of weeks ago, and they are building a new strategy of increasing mortgages to the Haitian society. The size of the mortgages is about $60,000. The monthly payments on that is about $700. In a country like Haiti, where per capita income is about $1,000, not even the top 2% of society can afford to borrow that. And when you ask them, well, maybe you can market it to the diaspora. Yes, we want to do that, we're going to do that. And the first question is, do you know what are the requirements? This is to the head of the mortgage bank of Haiti. What are the requirements that you would expect for a Haitian living abroad to get a mortgage? Well, they have to prove they live in Haiti. They have to demonstrate income in Haiti, but they don't. And so as you ask, they answer their own question that they have completely structured barriers to entry practically on purpose. And Haiti is not the exception, is the rule in most of these places. And when we looked at opportunities for remittance recipient households, there are also a number of policy opportunities. The first one is the baseline. You need to increase financial access and financial inclusion for remittance recipients. Those who are able to save should be able to have their savings in a financial institution for a number of reasons that have an effect on your financial independence. Second, you can also provide other incentives that reduce barriers to entry, to borrow money to improve your household, for example, or to build or set up a business. The issue is not about the opinion that people have that what people do is to use remittances in a way, or the bad use of remittances. In fact, you don't use your remittances, you manage your income. And the issue is basically how do you create incentives for your income to be better capitalized. And then from the broader economy, for the national economy, there are a number of policies and strategies that one needs to consider. One of them has to do with increasing partnerships between the countries and the financial sectors to expand financial products, to require banks to bankerize the population, to offer affordable financial products. There are also needs to reduce these barriers of entry at the broader level for everyone who wishes to invest in their home country or even to return. The incentives to return are not there in Latin America because there is no an environment that allows you to do so. Also, you can promote strategies on nostalgic trade in strengthening the value chain of production and distribution networks over nostalgic commodities. We estimate that 10% of US imports of commodities from several of Latin American countries come from nostalgic commodities. And these imports could increase even more and have a greater impact in local economies if we improve this value chain. And there are different ways to improve them, providing technical assistance for quality control, quality management of foodstuff, improving the land, the production in those sectors, among other things. So the policies exist. What is lacking, I think, is have the creativity on the one hand and the risk propensity to work in this region, in this subject. Second, take migration more seriously, not as a given that you simply let it happen and let it be. And three, establish more cooperation, bilateral cooperation between the host countries and the home countries when it comes to migration. Thank you.
Great. Excellent. Thanks. Anyway, that was an excellent overview and touched on a lot of different issues. Let's turn to Natasha now. She's going to set up her computer.
Yes, hopefully it will already be ready. And thanks again to Congressman Farr and his staff for organizing this. I can just log in real fast. So we've heard a lot about remittances, and some of the things that I'm going to talk about are going to focus on a couple of specific issues that are going to be colored by the institutions that I represent. I work for the Multilateral Investment Fund, which is the development laboratory within the Inter-American Development Bank Group. I have, oh, and this is not connected. Aha. I was referring to the screen, which is not there. Okay. So, as I was saying, and it's not connected, that's okay. I can just talk, doesn't matter. It's okay.
Here we go.
There we go. Okay. So, as I was saying, I represent the Multilateral Investment Fund, which is a development laboratory of the Inter-American Development Bank. We focus on promoting development in Latin America, and in the MIF, we, as you can see in the bottom half of the slide, there's a little bit of a description. We finance projects that are grants and investments and focusing on things like access to markets, access to services, basic services, and access to finance, which is the part where I focus on when I'm working on remittances within this group. And MIF has been working on remittances for about 15 years. since as a development laboratory, we seek to promote innovative avenues for private sector development. And we came upon this issue some time ago, and we continue to explore and focus on more particularly the links to access to finance, and that's something that I'm going to be talking mostly about in this presentation here today. I wanted to take advantage of this slide because it occurred to me, and and it never fails to, it's always something that I find very moving to be representing the, as it says up at the top, the Inter-American Development Bank, a leading source of development financing for Latin America and the Caribbean. And in 2013, approved grants and loans of the IDP reached $14 billion. And I'm here to talk about a set of flows that, for some time now has reached a volume that's 4 times that. And as Congressman Farr said, and as Manuel was mentioning in his comments, we're talking about a large sum of money and a large amount of people that are involved in this. That's always the driver that attracts the attention. It's just so much money, and it's a flow that continues to reach all of the countries of the region, as it does in the world. Obviously, we're talking about remittances just in Latin America, but remittances are not a LAC-specific phenomenon. It's actually not the #1 recipient region of the world, so it's a topic that is has broad. What we're talking about here today has broad implications for what happens in remittance markets around the world. Just a couple of other statistics. I don't want to throw any more than you've already seen. In terms of total ODA, I think Congressman Farr mentioned the comparison of the volume to what the United States gives in terms of aid. Remittances dwarf all aid that these countries get. So we're just talking about such significant amounts of money, and that's what really continues to, and needs, you just need to always remember that we're talking about all of these issues. It's because it's so much money. It's also because it's so many people that are behind it, and you've already heard plenty on that. What are these remittances for? Well, as lawmakers in the Congress, I'm sure somebody's probably thinking immediately of anti-money laundering and counter-financing of terrorism concerns. And believe me, if you haven't thought of it, your peers across the U.S. government have. The United States has important regulations in place at both the state and the federal level to monitor concerns in terms of AML and CFT. So much so that many private sector actors will probably argue that it takes quite an experienced actor to navigate the international remittance market because of the compliance with the regulations. So Walmart's been in the news recently about their domestic remittance business, but you might notice that they haven't jumped into the international transfers yet. They work with somebody else who's been doing that for many, many, many years. So going back to what are the remittances for? You'll find a lot of literature about how they're usually counter-cyclical. People send money when on the other side they need it, right? Of course, the exception was during the 2008-2009 crisis, when there were issues on the sending side, where in the developed countries where the migrants are, where the senders are, the situation was difficult. But as you can see from kind of the trend line of those bars, from 2002 to 2008, we just kept seeing significant levels of growth. It dropped 15% after 2009, but we're still up. It's come back. Remittance flows shed a lot less than other financial flows, if you'll recall. Statistics and news headlines from the 2009-2010 period, or 2008 even. So remittances are really less volatile, we like to say, than other financial flows, because it's motivated by the family need of getting the money where it needs to go. That's also been super useful in times of emergencies, natural disasters. Migrants are often first responders. They know their families, they know who needs the money, and so they send. And it usually is that they're usually there a lot quicker than humanitarian aid, which sometimes can be painfully slower than, it takes time. An example of that, if you can harken back to January 2010, which, in this country, it was a time where, people in the economic situation and labor markets, things were a little bit slow, people were uncertain, migrants were sending a little bit less because they either lost their jobs, were uncertain about their economic future. In Haiti, there was a terrible earthquake, if you remember, January 2010. We saw in February 2010, remittances jumped 32% with respect to the previous, that same month, the previous year. Migrants always, and you can imagine, Haiti is a country where there's a lot of people there, and unsurprisingly, that depend on remittances and from what the Haitian diaspora can give. So migrants in Haiti stepped up to the challenges. We've seen the same dynamic with other natural disasters in the past, Hurricane Mitch, earthquakes in Chile, et cetera, et cetera. So remittances are critical, and they can be hugely beneficial, again, to a huge number of people. And the power of these remittances is enhanced with the efficiency and safety of the market where they're transferred, and the regulatory and policy environment in each country, both the sending side and the recipient side, can play an important role in creating the conditions for the development of the remittances payment network. Market efficiency is obviously, if you'll imagine that it's an issue that's highly linked to cost, and that was an area of focus for many years for us. Remittance costs, as we've heard already, once I think somebody said, remittance costs are not what they were 15 years ago. They're less than half of what they were in the pre-2000 period. But we at the MIF, in any case, are part of an important multilateral effort that continues to promote a policy environment enabling sound and efficient remittance transactions. Because beyond the issue of just the price tag, there's a lot of other policy concerns that need to be addressed, both at the, on the sending side and on the recipient side. For example, issues related to transparency and consumer protection. Are customers able to shop for efficiently and effectively for the service that best fits them? Does the country have a payment system infrastructure that is accessible to all of the different actors that should be able to be providing the remittance service? What is the legal and regulatory environment like? Who's authorized to pay out remittances? Who's authorized to make the exchange transaction? And are these the right actors, and how is that working? Antitrust and competition legislation. Do authorities monitor things like exclusivity agreements? What are the different risk management and governance concerns? How are those managed? Is there effective dialogue between the private sector actors that are working in this business day in and day out and the public sector authorities that have some influence or some impact at any given part of the value chain, from foreign affairs ministries to your competition ministries to your regulators, your superintendencies, et cetera, et cetera, et cetera. These 5 issues are the general principles for international remittance services that were developed some 10 years ago, and we're very proud to be a part of an effort that offers technical assistance to government authorities around the region to help implement best practices and best international practice in each of these areas. And to reiterate, sorry, before I go, all of these issues are all the more important again because it's so much money. And it's so important for so many of the countries in the region. Getting to the focus of the access to finance that I was mentioning before, if I can just zoom out for a second, because we believe that remittances have huge potential for increasing financial inclusion in the region. Financial inclusion is a very big problem in Latin America, as you can see from some of the statistics up there. Essentially, about 250 million people operate outside the formal financial system. Only less than 40% of the adults in the region report holding an account at a formal financial institution. Access rates are lower if you're a woman, if you live in rural areas, or if you are in the low-income population. That's for access. Now, usage, which is really the important part, is even lower. So when we talk about financial inclusion, we're talking about not just access, but also usage. This is a very important thing that I want to stress because, obviously financial inclusion is not just, a lot of times we talk about bank account holderships as a proxy for financial inclusion, but dormancy also is a very important problem, as you can just see from the difference in the numbers. One thing is to have a product or a service, and another thing is to actually use it to save, right? So obviously there's a very important gap here. People are not using the financial system to save. But zooming back to remittances, what we're seeing is that there's a tremendous amount of people that are using, if you will, a payment service. Sometimes, as we've discovered, even at a financial institution. In other words, sometimes you have a formal financial institution that is acting as an agent for a money transfer company. Somebody's going to a bank to pick up a remittance, but the bank isn't offering them an account, isn't offering them a financial service, right? You were talking about just receiving cash and then that's it. So there's a gap there, and we are continuously trying to work on how to work on that in our projects and in how we talk about this issue, directing ourselves a lot to financial institutions. We believe that payments can be an effective way to attract new unbanked clients into this system. And in this case, we're talking about international remittance transactions, but we're also trying to do the same thing with other types of payments, with government payments. There's about, I think, 27 million low-income women, as you may know, that receive conditional cash transfers around the region. Most of those people don't use the formal financial system to save. So I'm gonna step it up a little bit. So we have, so our message to the financial institution is to expand your client base. You can get into the remittance market as an agent, maybe. You don't have to be the one handling the payment service. And let the product that the people are using be the hook for other financial services. And there's some data that are showing promise, but of the 250 million transactions, more or less, that occur every year, most of them continue to be paid out in cash. And I'm gonna hurry a little bit, just in the interest of time. So the challenge is for the financial institution is one of profitability, okay? When we're talking about, one thing that maybe you haven't heard yet is a lot of time the average transaction size is between 200 and 300. We're talking about a low value transaction. We're talking about, in the case of if this segment does access an account, we're talking about a low balance account. This profitability requires scale, and to reach scale you need to be able to offer at a large scale at a very low operational cost. So there's a number of different things that are being launched in the region that are very interesting. Low-cost technologies, regulations that are providing incentives for financial institutions to not have to build branches where the people are. Agent banking models are very promising phenomenon that we've been studying a lot lately, and we have an interesting study on that, and I'm happy to provide that information. That's for the provision of the financial service. Obviously, when we're talking to the financial intermediary, we're trying to tell them, harness these agent banking models, go to be present with the population, and in order to ensure volume, make sure that even though you're looking at your client here in rural Guatemala, make sure that you realize that when we're talking about remittances, part of your client lives in another country. They have to incorporate that as well in some way. If they're not doing it themselves, it has to be through an alliance. There are demand side issues as well. Some of these have been touched upon already. Trust is a super important issue for the low-income segment. Anybody in the industry will tell you that. Sometimes financial education programs can be a very effective way to reach out to a customer who has not been able or chosen not to use a formal financial institution to meet the financial needs. Strategies for marketing, strategies for product development, they all have to be tailored to the clientele. The kinds of products that you offer to a low-income customer need to be tailored to the low-income customer. A lot of times, if you have something that's like a term deposit where you just put in a sum of money and you just let it sit there and wait for the interest to come in, that's for people who already have a chunk of money to set aside. Maybe it's time to think more about something that's a little bit more incremental, a kind of product where you set aside just a little bit, month after month after month. So that's a phenomenon that we call programmatic savings or commitment savings. Very interesting, that's a type of financial product that's showing a lot of promise in what we're studying. The pricing structure, we heard a little bit about how people need to be able to spend their remittances or their family income on what they need. When you're in the low income segment, maybe your savings is a small portion of what your income is, but you need to be able to transact. And you need to be able to transact without being charged a really harsh fee every single time. The pricing structure of the product also needs to match the clientele. So in conclusion, remittances have a great potential for financial inclusion, which is a particularly big challenge in LAC, and it requires a targeted effort on the part of both private and public sectors alike. Private actors need to innovate to be able to develop financially viable business models for the segment, and public actors need to take a holistic view so as to address these objectives without inadvertently creating distortions and by promoting an enabling market environment for all of these actors in this important space. Okay, and I'll turn the floor over to our colleague from Western Union.
Thanks, Natasha. It was great slides as well. So we'll turn it over to Mario, who will tell us everything he is going to tell us in about a minute. You can do that.
Just like getting your money in minutes.
That's right.
Thank you. We're going to try to go to probably around 11:15 or so, Mario.
My name is Mario Hernandez. I'm the Director of Public Affairs at Western Union. I'm originally from Mexico. I've been with the company for 10 years, and our company has been around for 162 years, and we provide an array of services in 200 countries and territories. And obviously Latin America is one of our most important markets. They represent 9% of our revenue. And across Latin America, we have nearly 53,000 agent locations in 47 countries and territories. Our top performing countries in the region include Mexico, Argentina, Colombia, Dominican Republic, and Jamaica. What I'm going to tell you here, and in the interest of time, is the work that we do within immigrant communities. Natasha mentioned a key word, and that is trust. And that's what we do at Western Union. Our interaction with immigrant communities are based on trust, and we develop long-term relationships with immigrant groups from all the Latin American countries. One of the key issues that our company has been very active addressing is comprehensive immigration reform. And we are the one and only company that has started advocating actively on behalf of the immigration reform 10 years ago when they started the company. And this is critically important because now that the US is addressing and Congress is discussing immigration reform, you can find companies doing that. But 10 years ago, there were no companies doing this. And this is very important because Manuel emphasized that to have an undocumented status is a vulnerability for immigrants. And if immigrants are able to have a documentation that they can work legally, in the country, that will empower the community a lot. There is things that we do with immigrant groups. We visited their communities, we go to the neighborhoods here in the US, and we develop these long-term relationships. And this is how we have some programs at Western Union, like the 4+1 program. Western Union has 29 economic development projects in Mexico that involve private investment by Western Union, public investment by the federal, state, and municipal governments in Mexico, and something that many experts have been discussing about, and it's how do we engage the diaspora in diaspora investment in their home communities. Well, we have done it. When I said 29 economic development projects in 6 Mexican states involving diaspora investment, is easily said, but it's very difficult to be done. And I was the person responsible for that. And you know, the first thing that we had to do was to develop a trust relationship with immigrant groups. Immigrant groups, you go there and tell them, you know, there is money here, investment in your communities. At the beginning, they said, why? Why are you really interested in investing in the community? Why do you want to do this? So you have to develop these relationships. They have to see you around. We participated in their meetings. We went to the neighborhoods, to their meetings here in the US, but they also held meetings in Mexico, in their communities, in all different states. In the states of Oaxaca, Michoacan, Guerrero, Zacatecas, all these states, we participated in develop these projects. So that is something that we do. We include agricultural production, ecotourism, conservation of natural resources, economic development, infrastructure, education. Very good stories that we have. You know, for example, Roberto. Roberto was a landscaper working in Los Angeles, and he had been away from his family for many, many years because he was undocumented, couldn't go and travel and go visit their family. His kids were growing up without him, and he had a desire to go back to Mexico. He learned the skills to be a good landscaper. And they said, you know, why? If I'm coming from the state of Veracruz, where we have wonderful weather, I have a piece of land, I know how to cultivate flowers, I can go back to Mexico and start my own business. And that's what he did. He decided to go back, and with the 4+1 program, we were able to help him and just to give him some help. And people want to be with their families. It's a heavy cost. Immigration is an opportunity. It's like an opportunity like for me. I'm here, I come from Tasco Guerrero. I'm the person that was able to go to school, and I'm working here for Western Union. But my neighbors are in Chicago. My cousin is in Chicago. He's a mechanic, he's undocumented, and he has been in Chicago for 27 years, and he wants to go back, and he's always dreaming about going back to Mexico. So migration can have a heavy cost, especially if it is forced migration, when you have to leave your family to feed it, you have to leave your wife, your husband, or your kids in the home communities. Oaxaca, I would like to highlight that one because that is very important. In Oaxaca, we have indigenous people there. And there is an issue that I don't see addressed very frequently, and that is indigenous migration. People that don't even speak Spanish, they speak other languages, and they migrate because they have to feed their families. So internally they migrate from the state of Oaxaca to the northern part of Mexico, but many of them go to work in California as farm workers, and many of them have migrated to North Carolina and to New York, New Jersey area. And you know, that poses a challenge because these indigenous populations, they don't speak English, they don't speak Spanish, they speak their native tongue. And working with indigenous people, we have developed also programs in Oaxaca. The case of the ladies is very interesting too. In Nuevo Lindero, Guanajuato. In Nuevo Lindero, it's a town, I visited the town. And I'm there in the picture, surrounded by women. But the thing is that there are no men. There's very few men. You go to the community, and very few men you find walking people, and everybody tells you stories of migrants, and they say, my father is in California, my father is in Chicago, my son, or everybody has somebody in the US working. And they started their textile factory. They are producing towels, and they made an agreement with the government that helps promote the towels, so that they are, the hotels in Guanajuato, they buy the towels from this group. And, you know, for example, at the beginning, they were carrying their products to take them to the Guanajuato, the capital city of the state, carrying the things, and they wouldn't drive. And they said, you know, they said, well, we don't drive. Somebody learned how to drive. They were able to buy a truck. And then the textile factory became a community center, an educational center, because they introduced the first computer that had internet access in the town. And they started with 2 computers, and then the kids, the high school kids, that they didn't have anything to do after school, they started to go there, and while their mothers and sisters were working, they were doing homeworks, and they were having access to the internet. There were lines of people waiting to have access to the internet. Now I think that more than a factory, it's becoming more like an educational center to me. And I can tell you more examples, but what I want to tell you is that it can be done. It's very difficult to deal with federal, state, municipal jurisdictions, and then to deal with immigrant groups and local communities, and then to develop these projects. It takes time, it's time consuming, and sometimes you feel that you're not going to be able to do it. But we have implemented them, and they are producing results. The other thing is that we get very active here in the US as well. And there are 2 topics that are very important for me, and that is immigrant integration, for immigrants that are already here, how we develop public-private sector strategies so that immigrants that are here become integrated into the economic, political, social life here in the US. And the other thing is that something that we're doing that I feel very proud about, and that is immigrant entrepreneurship. What I see every time that I come here to Washington, D.C., and I go to immigrant neighborhoods, or I go to New York, or Los Angeles, or Dallas, many, many places, I see immigrants that are starting their own businesses. They are revitalizing neighborhoods. They are introducing innovation, and they are investing here in their communities. So we went to the mayor's office of New Americans in Chicago and talked to them, said, why don't we develop strategies so that we support immigrant entrepreneurs? And they told me, well, yes, we do. We have already these workshops, but nobody attends the workshops. I said, well, where are they happening, the workshops? At City Hall, downtown. I said, people are not going to go there. Number 1, we need to go to the neighborhoods where immigrants are. And number 2, we need to partner with immigrant groups, because they said we have a 6,000 database of people that we send notifications, invitations, and nobody comes. I said, well, with immigrant groups, you have to work word of mouth. Immigrant groups, you need to know them. You need to talk to them. And you don't even need a flyer. You don't even need an email or anything. Just word of mouth, especially for those that are immigrant entrepreneurs. So they have been very successful. We had, for the Latino community, for the African community, a Polish community in Chicago, and other communities. With the new mayor of Los Angeles, Eric Garcetti, he just started, reactivated the Office of Immigrant Affairs, and the 10th of May, we're gonna be having that New American Entrepreneur Expo, following the model that we have implemented successfully in Chicago, New York. Thank you very much.
Great, thanks, Mario. Those three presentations were incredibly complementary to each other, and it was great to end with some examples from the private sector of how remittances are having an effect concretely in terms of development. Let's open it up to questions. I'll take 2 or 3 questions at a time and see how many we can get through over the next few minutes. Great.
Hi, I was just wondering if you had seen, or was there concern of remittances causing inequality because of the people who receive them versus people who don't receive them, or also just, is there a difference, like, are some people receiving more remittances than others, such as, I know, I intern with the Inter-American Foundation and we focus on Afro-descendants and indigenous populations, and do they receive just as many, or are they receiving just as many remittances as other citizens of the countries?
Great. Another question in the back?
Good morning, and thank you to all of you. I was just wondering if you have any numbers on remittances to Cuba. We have seen numbers from 1.2 to 2 point something.
And one more question.
My name is Dr. Magdalena Silva. I wanted to ask Senor Hernandez, in your work to promote reform, what would you advise the other panelists and us from your experience in immigration reform?
Great, we have 3 questions, and if I could just add on to the Cuba question in terms of if you've seen any impact in terms of the effect on development in Cuba, since particularly family remittances have been lifted since, I think, 2009. So, who would like to begin? Natasha?
I can start with, I can't refer to the Cuba question
Yeah,
since
fine.
Cuba isn't part of the IDB. So, but we have, you're fortunate we have plenty of people who can talk about that here today. On the first question, I don't think you can really talk about it remittances in terms of inequality, in the sense that these are private flows, so people are sending them to their families, right? Obviously, the people who are benefiting from remittances, you won't be surprised to hear, compared to those households in their same categories that don't receive remittances, there's a difference, definitely. One thing that I can probably say with certainty is that we've studied is, and this is actually something related to another comment that I think it was Congressman Farr was talking about, poverty levels. What we've been able to study is that, and we can say with empirical data, is that with households with remittances, if without those remittances, they would fall into the category of poverty. When you divide the population into quintiles, households without, if you take remittances out of the household income, your numbers for extreme poverty would increase significantly, and your numbers for the second to last quintile also would increase significantly. So effectively, remittances are lifting a significant part of the population out of poverty. Obviously, those who don't get remittances don't have that benefit. But I don't think you can talk about it in terms of remittances causing inequality per se. But definitely there is tangible results in terms of poverty alleviation. It's a little bit difficult to study from the perspective of, what is the poverty impact of remittances? Methodologically speaking, it's hard to study a family that doesn't get anything and then find that person and see and hope that sequentially afterwards somebody will migrate and then send money back and then study in a time series like that. That's very difficult to do, but what we have been able to do is study what the remittance does to the household income, and without that income, the numbers for the 4th and 5th quintiles would increase of the population.
Yes, I think Natasha is right. You can't. It's just a little bit methodologically complicated. I mean, the way to look at it is what is the distributive impact of remittances in communities and in the broader society. And if you measure it in that context, there is evidence that shows that there is poverty reduction. Now, the policy issue that comes across is that while you receive remittances keep people out of poverty. Basically, the flow of money increases your household income by 100% to some extent, in most cases. So, of course, a household that doesn't have a migrant will continue to have that level of, the old level of income while the other one increases. Now, does that create inequality? No. It doesn't, because just because you improve your economic condition doesn't mean that you are affecting the other. The effect comes out at the distributive level. If those increases in income are not redistributed in the broader society, there are different ways to look at it. One is through revenue, through taxes. The contribution of remittances into the tax economy increases substantially. Then you have other social policies, etc., but that becomes more of a public policy issue, not a private household issue. With regards to, so the policy challenge really is how do you get people out of poverty from remittances? How do you leverage those through policies to get people out of poverty, not just to keep them out of poverty during the process? With regards to Cuba, there is a lot of interesting developments going on in Cuba that have to do more with the economic reforms than with Cubans sending money home. Right now, the Cuban community has not increased the flow of remittances in the ways that people would have expected. Traditionally, Cubans in the United States sent about $100 a month on average. And in fact, the remittance pattern is 8 times a year that they sent about $150 more or less. That amount has not changed significantly over the past 10 years, even though there's been some liberalization. The reason being associated to different dynamics. One is that the Cuban migrant community was one of the most affected people during the recession, especially those living in Florida. Second is that the level of competition with the Cuban market is very limited. There are very few outlets to send money, and they're all very expensive. So you rely on informal methods of sending, but that gets you to send lower amounts. Then there is another issue that people were expecting that with the Cuban economic reforms, immigrants were going to send more money for investment in local enterprises, but that hasn't happened because the dynamics in the internal economy in Cuba have yet to present themselves attractive for creating micro enterprises or small businesses resulting from the economic reforms. So the Cuban economy is still reforming itself, and so migrants don't see much incentives to send money. They don't have enough purchasing power. When we did a survey in Cuba a year ago and another one 3 years ago, and we learned that when we asked people if they will take advantage of the economic reforms, etc., the percentage of people saying that will do so was about 30%, which in itself was pretty high. But when we try to detect how much they would be prepared to invest in a business, the amount of investment was so low, it was under $2,000, that will tell you that you didn't have enough resources to really set up any substantial business that will help you economically. So in terms of the volumes, I think my estimate is about $1.2, $1.3 billion in remittances going to Cuba. Based basically on the information on official statistics of the number of migrants, the propensity to remit, predominantly of Cubans in the United States and Spain. Also, Cubans in Spain have been affected dramatically by the Spanish economy. and third, on the amounts that we have collected in terms of what they say they send, which is about $150.
Great, thanks. Let's take a, was that it? Was there, Mario, I apologize.
I just wanted to concentrate, but would you be so kind as to repeat the question again?
Yeah, thank you. You talk about how you have been, your company has been working and influencing the agenda for reform, immigration reform. There are probably some lessons learned from what you have lived, and could you recommend to other businesses and us how to go to support the reform?
Yeah, I think that, you know, it is an issue that needs to be addressed, and I still have hope that, you know, we're able to have a discussion that is positive and bipartisan. That's what we have been encouraging about from the very beginning. I think that the private sector has become more engaged. You know, the U.S. Chamber of Commerce is participating. There are business groups in several places that we participate in, like the National Partnership for the New American Economy, led by former Mayor Bloomberg. And we are part of that group. In Chicago, there is the Chicago Business Table. We're part of that group. And many other companies are increasingly engaging and seeing that they can contribute something to the debate. Yeah.
Can I just add one thing? I think, you know, I speak as an individual, not as an academic or whatever you want to call me. Immigration reform today is politically and morally indefensible not to engage into immigration reform and do something about it. Because we are partly responsible and largely responsible because of the presence of undocumented migrants here. And we need to distinguish between facts and opinions. The facts are that the rate of deportations that are taking place in this country are unacceptable. You cannot solve this problem by saying that you're breaking the law, when the problem is the law, not the immigration coming across. You also have to understand that there is a significant demand of foreign labor that has been consistent and cannot be denied. And that the third issue is that in terms of facts, the risks that illegal immigration represents to the country have been actually mitigated, and there are measures to deal with it at different levels, not just through deportation, but when it comes to terrorism, etc. So you have the opinions on immigration. When it comes against immigration reform, they're predominantly xenophobic. And we need to put the finger in the issue that we're dealing with xenophobia. We're not dealing with the problem that there are too many immigrants in this country. And I think it's a social problem. We need to all take advantage. You know, of the 40 million immigrants in the United States, 51% are women. 25% of those are domestic workers. That means that at least 5 to 7 million households that have hired a domestic worker working in the United States, in a country that has 100 million households. And when you segment it at the level of the metropolitan cities, the number of people who has a relationship with the domestic worker that doesn't get Social Security, doesn't get fair wages, that's the labor right issue we need to pay attention to rather than talk about illegal immigration.
We have time for a couple more questions. Yes. One more question. Well, that's what we have, Kate. One more question. Perfect.
Just in time. Thank you to the four of you for such tremendous, insightful information. My question is for Natasha. You touched upon an interesting subject, and that's the fact of financial inclusion. You mentioned that 40% of people actually it's the reported amount is less than 40%. Can you talk a little bit more about the strategy to sort of increase the amount of the report that they're doing, and also what can the U.S. government do? What can the role of the U.S. government do to help increase that percentage?
Certainly. Okay, so the figure that I reported was, to be specific, it was from a study that was conducted a couple of years ago with the World Bank and Gallup called the Findex. And that was a study that was conducted in 163 countries around the world, or close to it. The figure that I reported was then about bank account ownership, right? And that's 39% of individuals over the age of 15 reported holding a bank account. Now, just before I get into answering your question, again, I just want to reiterate, which is particularly important in this world where every time somebody launches a mobile financial service or talks about mobile phones in this context, everybody gets excited. That means nothing unless they're being used, okay? So just because there is a phone doesn't mean that somebody's using it to save. That's an aside.
Just because you wear Levi's doesn't make you a cowboy.
Exactly. You can go, I can go on and on and on, but that is an important thing, particularly when people talk about the experience of M-Pesa and in Kenya and how, they'll throw all kinds of numbers at you. The next time you hear somebody talk to you about mobile financial services, make sure that when they give you a number, make sure you're asking, okay, but are those users? Are those just registered people, or are those, and what's the transactionality? Are people using it? Are people, what's the difference between their usage of other things like cash, which continues to be, by and large, I mean, the vast majority of transactions still continue to be dominated by cash in this segment, in this region. So, our strategy is to work in the MIF. Here I'm talking about my particular institution. We work with the entities that are authorized to offer savings products, that take deposits, right? So we're working with the financial institutions themselves. And it's been a hard sell over the years in a context where the commercial banking sector perhaps didn't have an incentive to take on the upfront costs of developing a strategy for another segment. There was sufficient profitability in the segments that they served. That maybe is changing with some of the countries in the region that are getting more aggressive in terms of national financial inclusion strategies. They're passing different types of laws to create incentives for larger banks to go down market. A lot of times we find a lot of receptivity among financial institutions that are already in that segment. We work a lot with microfinance institutions, cooperatives. The microfinance industry has been growing exponentially over the last decade or so, and it's a segment that is predominantly regulated in Latin America, which is not the case elsewhere in the world, perhaps. I think it's over 70% of microfinance institutions are regulated in the region. And we work with these institutions we have two different kinds of strategies. But essentially, one is to strengthen those who are already working in the low-income segment and to give them the capacity to expand, and others to help, and we also try to attract some of the bigger actors to help them and attract them to go down market, as I was saying. So our strategy in the remittances space, and like as I was trying to say, maybe I said it a little bit quickly, is to get these financial institutions to think of expanding their market to the unbanked population, in other words, everyone who's not the 39%, by leveraging those services that they already use on a regular basis. We're talking about people who receive remittances month after month, okay? And the same thing with the conditional cash transfers. You have a regular phenomenon, a regular financial service, the payment service. And so set up a line of business that's maybe going to involve financial education, some sort of alternative distribution channel so it can be present where you don't have branches, where you don't have a physical branch. and to have a tailored and segmented set of financial products that make sense for that segment. And in the projects where we've started to do things like that, with credit projects, for example, in the past, we've had very significant positive results. We're currently trying to focus on linking payments to savings specifically, because we believe that savings can have, is of particular importance to the vulnerable population, because of, it's an inexpensive way to address emergencies to cover the costs of emergencies when they do arise without being overburdened by debt. We have a program that we are implementing where we have an approved amount of money to promote the link between remittances and savings, just as we have another program where we do the same to promote savings and unconditional cash transfers. And across the MIF, we have a various number of programs that deal with the access to finance issuance specifically. On the public sector side, as I mentioned, you might have recalled there was a slide that I showed earlier with 5 green bars. There's a number of different areas of public policy work that we get involved in. We do country diagnostics to go at the country level, see how different countries are addressing these issues, provide a country diagnostic to the authorities, and then we offer, free money, grant technical assistance to implement the changes that we recommend.
Thanks. Well, we're well past the time. I want to thank Congressman Farr and his office for putting on this series. Also for Katie Whalen for making this all happen, for organizing it. Thanks very much. And most importantly today, our 3 speakers. Give her a